Good morning, everyone, and thank you for giving me this opportunities to present today. In this presentation, I will be discussing the strategic positions of Volkswagen and how the company is responding to the major changes in the global automobile industries. The main focus will be on Volkswagen shifts towards the electrical and sustainable mobilities. At that time, the challenges it is facing and what the solutions that can help the company improve profitabilities and remains competitive in the long term. I will be with the executive summaries followed by the main problems like comparative positions and marketing conditions and financial performance, and finally proposed solutions and conclusions are being explained in the coming slides. The executive summary of this topic is the Volkswagen is currently going through major transformations as it is moves away from the traditional engines towards electrical and sustainable mobilities. This shift is necessary because the changing the customer preferences and rapid technology development. However, during this transformation, the company facing the profit decreases and consumption increases, especially in the electrical segment, raising the production cost and slower electrical vehicle consumption is less. So that we have some like AI influencer productions and battery partnerships and electrical platforms are being used to protect the margins and control the cost. So overall, the long-term goal of the achieving 15% of the electrical vehicle market share in the global leader in the automobile industries. Coming to the problems. The main problem facing Volkswagen is decreasing in revenue, which is strongly influenced by the high cost of electrical vehicles and massive capital investment in digital platforms. Producing electrical vehicles is more expensive due to the battery cost. At the same time, Volkswagen electrical vehicles adoption is slower than the competitors such as Tesla and BYD. And another major issue is Volkswagen increasing reliance on external battery suppliers. This increases price fluctuations and reduces control over the supply chain, making it harder to the manage cost. And finally, strong price consumption, especially from Chinese electrical vehicles manufacturers, is putting pressure on margins and reducing the market share. Coming to the comparative positions, Volkswagen remains one of the largest automobile groups in the world, with a categorized brand portfolio that includes Volkswagen, Audi, and Porsche. This wide portfolio helps the company to serve different customer segments. And one of the Volkswagen key strengths is MEB electrical platforms, which enables the cost-effective and scalable electrical vehicles productions across the multiple brand of regions. The company aims to achieve the 15% of global electrical vehicle market by the year of 2030, which supports its long-term comparative strategies. And Volkswagen has a benefits from that 115 production sites worldwide. This scale improves supplies, reliabilities, and reduces per unit production cost, and now helping it maintain the relevance in the global market. Barriers to entry. The automobile and electrical vehicles industries has very high barriers to entry, especially for the new companies require extremely large capital investment to build their production plants, and they need to be large investments in the automation and funds research and development. This makes it difficult for the new players to compete the scale. And also they need to satisfy the environmental and satisfy the regulations in the regions such as Europe, China and North America further increases. They need to be satisfied. For Volkswagen, they don't need to be strongly perform because it has a large scale of manufacturing, like 115 in the worldwide manufacturing sites, which is significantly lowers production cost per vehicle. This company also has a long-term relationship with the key suppliers like battery manufacturing. In additionally, strong brand recognition and good loyalties has been maintaining by the Volkswagen. Coming to the market size, Volkswagen operates in the global automobile market, which is valued at approximately 62.19 billion US dollars in the year of 2025. This helps the large market provides strong long-term demand opportunities. The global electrical vehicle market is growing rapidly with a projected compound annual growth such as 32.5% between 2025 and 2030. This creates a significant expansion opportunities for Volkswagen. The company has a strong presence in the Europe, China, and North America, which are currently one of the best selling electrical vehicles because the government incentives and policies in those regions encouraging the customers to switch the electrical vehicles. And at the last time, Volkswagen goals is achieving the 15% electrical vehicle market share by the year of 2030 reflects ambition to capture the significant portion of the growing market. Coming to the financial plan. Volkswagen financial performance has been under pressure in the recent years. Comparing to the profit margins decreasing to 6% in the year of 2024 compared to the much higher level in the previous year. The decreasing reflects the electrical vehicle manufacturing cost and higher input prices. In the return of capital, 4.6% in 2024, showing reduced efficiency using to invested capital. Coming to the liquidity, remains stable, which is current ratio of 1.67 as a quick ratio of 1.01, including that the company can meet the short-term financial obligations. Volkswagen financial strategies focus on cost control because of AI-driven production and the battery partnerships to protect margins and improve the capital efficiency. My solutions. To address these challenges, Volkswagen should optimize the electrical vehicle transformation by expanding the use of the MEP platforms across both affordable and premium models. This will improve the sale efficiencies, reduce production costs, and the company should also invest more in the battery partnerships and in the host battery cells manufacturing to reduce the dependencies is on external suppliers and lower unit cost. Delaying the AI influencer productions systems and optimize the can significantly reduce the manufacturing cost and potentially by up to 15% manually can be decreases and simplifying this organizational success will help improve the decision making and speed operational ability. And coming to that, additionally, improving supply chain and inventory management will reduce delays and improve the utilization and protect the profit margins. Coming to the finally, reason for the investment. Volkswagen represents strong reason for the long-term investment. The company remains one of the most largest automobile manufacturers in the world, supported by the well-diversified brand portfolio and wide global production network. And the strategic focus on expanding the MEB electrical platform allows the Volkswagen to reduce the cost through the scale of improving profitability over the time. In additionally, investment in the AI influencer manufacturing is automation expanded to improve the production efficiency, lower operating costs in the coming years. Overall, the overall Volkswagen offers investors a combination of scale of strong. It has like a brand value, long-term growth, potential in electrical vehicles, and improving the cost efficiency with disciplined investment in sustainability, technology, and operational improvement. As the global electrical vehicle market continues to expand, this is are the main reasons we can invest in the Volkswagen. These are the references. From here, the screen clippings are started. For every references, we have produced the screen clippings. and thank you for giving this opportunity.